Good morning, good morning, and welcome to today's pre-market prep session, the session for August 22nd, 2024. This pre-market prep session is the one where we go over all the important news, notes, analysis, information necessary to keeping you consistently profitable in markets, keeping you on the same side as big money, keeping you as, I guess, blown away by price action as little as possible, right? You kind of want to make sure that whatever happens, you were pretty much expecting it. And that way you're, always kind of making decisions in line with probability. That's what you're looking to do. You're never going to win every single trade. You're never going to be right all of the time, right? It's about you remaining net neutral when you're right, when you're wrong, and focusing on process over profits. Identifying what the charts are telling you and aligning yourself in that way in order to position yourself between where big money is and where it's trying to be, right? In life in general, if you do that, you'll be pretty well off. And it's the same thing in markets. So that's what we're looking to do. And we do that by getting 1% better each and every day. So throw those ones in the chat, whether you're watching live or via replay, signifying your intention to get 1% better, right? And you see everything else start to fall in line as a byproduct. So our top news here, let's dive into it. It's gone. There's still ongoing chatter about the huge revision to the U.S. job growth seen yesterday and what it might signify for the economy and markets. 818,000 jobs were wiped out in the 12 months through March 2024, or 68,000 per month, resulting in the biggest downward adjustment since the global financial crisis. Data revisions are common, but usually not to that degree, even with the large standard of deviation typically assigned to non-farm payroll figures. So essentially, someone was cooking these books because that does not make sense, right? They in yesterday's report, right? That they do revisions of like job growth and all of that. They wiped out 818,000 jobs, right? 818,000 jobs were wiped out in the 12 months through March 2024. Um, like, did we just lose track of that? Like, when I'm confused. I'm confused as to how, and that's why, again, like, being an econ major, they can cook these books to say whatever they want to say, and then they can adjust them like based off of how, why are you adjusting this? Based off of what are you adjusting this? Right? They're just like, actually, all these jobs are wiped out. I think maybe this goes directly in line with the narrative of them needing to cut in September. So maybe this is just, another push in that direction. But it's like you suddenly go back, you're like, by the way, all our numbers from the past this many months were wrong, and this many more jobs were wiped out. So Powell, you definitely need to cut in September. It's like, well, where did that come from? Where did that come from? Right? I get it, it's an election year, and it definitely helps one side over the other for those rate cuts to happen. Especially going into election season. But I just think like that's wild to me. And you know what? People really don't think a second thought like about it, but it's just like, where did that come from? Where in the world did that come from? And maybe I just need to take a deeper look into it. Maybe it is common practice, but it just seems weird to me that out of nowhere they're like, yo, actually all these more jobs are gone and all these more people are unemployed than what we thought. It's like that seems like very convenient timing. Not an exact science, so I'm sure this is where they give us the lowdown. The Bureau of Labor Statistics usually surveys 100,000 to 150,000 businesses each month, but the department then extrapolates from those surveys to get an estimate of how many jobs were created in the entire economy. Later on, the quarterly re-estimation process looks at 60 million business records, many of which were not available at the time of the initial monthly payroll releases. The records can include unemployment benefits, seasonal hiring for the holidays, and unavoidable lags, such as delayed payroll data, which can give a better picture of overall economic activity. Technically, the BLS could publish the data once it has all the reports to avoid revisions. However, many participants need access to the earliest possible read on labor market developments, like policymakers and lawmakers, like the Fed, right, as well as business owners and investors. Initial estimates are generally in line with trends, but the accuracy of the BLS data has been called into question more recently with requests to revise the birth death models of corporations or other influential factors, including undocumented migrants. And that's the tough thing is there's no easy way to get this data, right? If you guys went through elementary school and you had to like conduct a survey and stuff like that, there's no easy way to do so, right? I mean, typically, if somebody sends me a survey to do something, like I'm not gonna lie, I don't care to do it, right? Unless it's something that I want to do, right? Like it's like a survey that can help you get to where you want to be. Like they're just like, hey, how's your life going? I don't really care to talk to you, to be completely honest. And I feel like most people are probably the same way. So I don't get how they get people to fill out this information or how they get any of this information. It's probably, a big pain in the butt. But I just think that when you have revisions that are that large out of nowhere, then there's probably a better way that you could be going about it. But this, in terms of what this boils down to, this just further strengthens the case for the Fed needing to cut in September. So at this point, I feel like it's pretty much set in stone that we get cuts. It's just how big, right? Will it be a 50-point basis cut now? Because it's kind of seeming like it will be a 50 basis point cut at this point. Let's see here what it means. Despite the major revision that had largely been expected, trends still appear to be positive. Instead of 250,000 payroll additions per month, the figure was around 185 to 200K mark on average, which likely would have led to the same monetary policy regime from the Fed over the past year. That might look different going forward, given the rise in unemployment rate, thereby cementing a Fed rate cut in September, like we just talked about. The dovishness even got markets excited on Wednesday, especially after FOMC minutes showed such an action was likely with stocks rising amid chatter of deeper rate cuts. So yeah, the FOMC minutes came out yesterday, and I'm just pulling up the exact quote here. Um, let's see, can you find it here? The vast majority of participants, meaning the Fed governors, said it would be likely appropriate to ease policy at the next meeting if data continued to come in as expected. So, you know, that's just for anybody who wasn't aware, but it's just, everything is pushing and pushing closer toward that probability of us getting cuts. Trade union lockout, it's official. Canada's two main freight rail companies, Canadian Pacific Kansas City, CP is the ticker, and then Canadian National Railway, CNI, have shut down their rail networks in the country after contract negotiations broke down. Rating agency Moody's projected that the lockout, which will take 75% of Canada's freight rail traffic online, could cost the economy over 341 million Canadian dollars per day, which is around 250 million US dollars per day, which is equal to more than 4% of its GDP, which is not fun. About a third of the traffic moved by CN Rail and CPKC also makes its way into the US, likely impacting cross border trade and disrupting North American supply chains. We've seen this before. Railways are very important. I feel like people kind of like assume like, oh, it's not the 1920s. Who gives a crap about trains? A lot of stuff is still delivered by train, and railways are important. And this trend of unionization that we've been covering for the past few years continues. So we'll see if this is something that starts to affect tickers in the way it did last time. There were times before where there were trades to be made. I don't want to get sidetracked. You guys hear me talk about mental capital a lot in this game. Mental capital is how much your brain has to give forward, right? And we have a capped amount. We're not AI. We're not even AI has a capped amount, right? But we can't just put brain power toward all these different things and achieve the result we want to achieve. So when it comes to markets, one thing you have to do is decide where your attention is needed most, right? And right now, given where we are with markets, it's most needed figuring out how we behave and moving forward as we test all-time highs, right? What you don't want to do, it's like, I don't know. It's like if you come home, right? You come home, and I feel bad because it's happened to a friend of mine. But you come home, and it's like your dog had an upset stomach in the morning, or maybe you wake up, your dog had an upset stomach in the morning. You wake up, you realize, oh, I don't have coffee, and then you also look, or maybe you don't have your morning breakfast sandwich. I don't have my morning breakfast sandwich. I ran out, right? I ran out of my breakfast sandwich, but your dog had an upset stomach. It puked and crapped everywhere, right? One of those things deserves a lot more of your attention, right, than the other. Like at the end of the day, you could make a protein shake, you could do a lot of things. A lot of people get caught up with the minor thing in markets. They're like, there's this strike that's going on, so I got to make sure I keep an eye on the railway tickers. And it's like, bro, the main market itself might be preparing to undergo a drastic change. So it's like you are focusing on railway shutdowns when it's like you need to be looking at the bigger picture. And that's a big takeaway that I feel like a lot of people can learn from. People will kind of take a look at, oh, well, this thing, gapped up on earnings. Or, I heard this company might be acquired by another company. Yeah, that's all good and dandy, but at the end of the day, that's not where your mental capital is best spent. Because a lot of times when you get aware of that kind of stuff, the move has already happened. So pay attention to what matters the most, right? You got to pay attention to the biggest threats, and really spend your mental capital there. And that's why, people hit me up like, hey, do you see this company, AI company might be getting acquired by this larger company? It's like I didn't see it, and frankly, I'm not too concerned with it. If somebody happened to be in that, and they made money from it, awesome. But for the most part, got bigger fish to fry. And mental capital is a big part of making sure that you can continue to trade and trade effectively. Because we have mental capital that uses up other portions, right? Like everybody's got a family, we've got other things to do. So you can only give so much to the market before it just becomes a toxic relationship. And that's why people are like, I can't trade anymore because you didn't know how to manage that mental capital. You were sitting there staring at candles and suddenly you did no work, you got no groceries, you didn't work out. Right. It's just anxiety over candlesticks and fiat currency. Um, Media news, succession planning. Disney, ticker Diz, has chosen board member and Morgan Stanley executive chairman James Gorman to lead the committee that will find a successor for top boss Bob Iger. Other executives in the group include Disney chairman Mark Parker, as well as board members like GM CEO Mary Barra. The move marks a significant step forward in the succession process for Iger since Disney formed the committee last January. Iger left Disney in 2020 and picked Bob Chapek as its successor, but was brought back to the company in November 2022. I mean, Bob Iger is like the poster child of Disney, right? Like Disney struggles to survive without Bob Iger, and they're trying to find some way for him to go off, and live a nice life in retirement. And I hope for his sake, that he can. But Disney feels better with Bob Iger in the CEO seat, and that's where we're at with things. But speaking of which, Disney is at a very fun spot here. We've been covering. Disney paid us on some nice call swings, paid us very nicely. And Disney right now kind of peeking over an area that can make it very, very interesting, where we can continue to make money off it. So we'll see. It all depends on how we close today, and how we close out the week, really. But Disney, another name that could be interesting here off the back of this news. This might be just what it needs to push it on over. Automotive news, EV strategy, ticker F for Ford is overhauling its electric vehicle strategy, which includes dropping a plan for a new electric SUV and pivoting toward hybrid versions. The Detroit automaker's EV business has continued to bleed money, with prior forecasts that it would lose between $5 billion and $5.5 billion in 2024. The strategy shift is expected to cost Ford up to $1.9 billion, including a $400 million non-cash charge for the write-down of SUV manufacturing assets. It will also delay the successor to the F-150 Lightning, trim capex on pure EVs, and ramp up U.S. battery production. So, shout out to Ford. Today's markets in Asia: Japan up 0.7%, Hong Kong up 1.4%, China down 0.3%, India up 0.2%. The FTSE in London up 0.2%, Paris up 0.2%, Frankfurt up 0.2%, the Dow up 0.1%, S&P up 0.1%. Let's see, I think that's changed here this morning. Yeah, yeah, we're up further than point 0.1, probably point 0.3, point 0.4. We'll be opening up right at price target number one. It looks like 562.56 for our SPY calls from yesterday. So looking to make some nice money here at open, which is always a great time, right? Which is always a great time, and you want to be excited for it and be grateful for it and show gratitude. I know I seem kind of like monotone regardless of what happens. It's like, oh, we open up and we're down, we open up and we're up. It's because you have to maintain your wits and keep your wits about you regardless of what happens. I'm not over here like, wow, this is gonna be good. Like you gotta kind of keep a net neutral, but while maintaining gratitude, which is very tough. Like we're as emotional beings, it's very tough to do that. When something good happens, you want to be over the moon happy. It's okay to be very happy, right? And say, okay, awesome, great job. Let me make sure I'm still being responsible, still managing risk, still doing what I'm supposed to do. But yeah, you don't want to like become to the point where you don't have feelings. It's just managing them, right? Realizing that they're transitory and that you aren't your feelings. That's all when people say, like, again, you don't want to say I am angry, you say I feel angry. right? I am angry. You're not angry, right? That means you, the essence, right, that is imbued within you is angry, and that's not the case, right? You're not always angry. You are not that thing. You're just feeling that thing. Um, so that's what I kind of let myself know, regardless of whether or not we open up and we're green or we open up and we're red. And by that I mean our portfolios, because the market opening green or red doesn't matter. With options, you can make money both ways. But knowing how to again manage yourself is 99% of trading, because the majority of the error that happens is human error. In terms of today's economic calendar, also Bitcoin up 3.1%, back above 61K. So shout out Bitcoin. Crude oil up 0.5%. Today's economic calendar: Jackson Hole Economic Symposium, and then we've got Powell speaking tomorrow. Jobless claims data at 8:30 a.m. PMI composite flash data at 9:45, and then existing home sales at 10. So we've got two of those pieces of data that 15 minutes after open and then 30 minutes after open, we can get some short-term volatility because of it. What else is happening? Let's see. Bronfman. I think that's how you pronounce it. Bronfman. Sweden's Paramount offer to 6 billion. Can we just get this over with, or just stop talking about it? It's annoying, right? I don't care if Paramount gets acquired at this point. It's like this is just, it's not working out. It's getting so desperate. It's giving desperation. Apple App Store Apple App Store head Matt Fisher to leave in October. Macy's shares see worst day in a year on bearish outlook. That's not fun. Hopefully the holidays helps them out. TD sets aside $2.6 billion to settle U.S. probe, sells Schwab shares. Big investment from McDonald's in UK and Ireland. Microsoft updates 2025 investor metrics and segments. Snowflake ticker Snow boosts guidance, but billings disappoint. Zoom results outlook crush estimates. CFO to resign. Enbridge cuts pipeline tolls as Trans Mountain adds competition. And then RFK Jr. planning to drop out of presidential race and endorse Trump, he says. So that's where we are with things as we head into this fine day on August 22nd, 2024. As always, just look to get 1% better and look to focus on what matters. A large majority of our problems, right? If you've got four problems, at least one of them is made up by you in your head, right? Pretty much 99% of the time. So if you're, stressed today, just on a general note, or you're stressed about anything, right? You're stressed about, you're learning, whether you're learning something new or anything like that, try and identify which one of those things is self-produced, right? Are you scared about something, but you're focusing on something that it's not important to focus on yet, right? That's like if I start driving school and I'm scared about merging, and you haven't even learned the Prindle, right? Why are you scared about merging into lanes and you're not even focused on what you are supposed to be focused on at that time? Break things up into bite-sized chunks, because that's how our human brains are designed to process things in chunks. So break everything down in chunks, and no matter how big it is surmountable if you break it down in little pieces. So continue to break it down into pieces, follow the direction, right, that you're supposed to go. And a lot of times you get confirmation of that while in motion, as well as by those that are more experienced in that area than you, right, to lean on, and just continue to chip away at it. But you don't have to build Rome in a day, and we're not looking to do that. We're looking to get what? 1% better, right? So everybody have a great day. I'll see you back here tomorrow morning for our last pre-market prep session of the week. Have a good one.